Hello, hello, hello. Welcome to today's session based on our head start with trading psychology or psychology itself. Please make sure to read the disclaimer above through there that the following videos, clips, demonstrations are for educational purposes only. TradingTip provides these videos purposely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that the hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our product. So if you have any questions, please, or any form of challenges based on what we're going to discuss today, you can get in contact here at Reynald@Tradewithufos.com. So once again, it's Reynald@Tradewithufos.com, and for services here, we can go through here at Tradewithufos.com/Reynaldo. And make sure to also attend some of our webinars with our different instructors. You can learn a lot from them. They're awesome. So, but nevertheless, we are going to begin in terms of the group coaching today. And firstly, I would like to ask you, how did you perform this week? How did you perform this week? Okay, so how did you perform this week? So that's the first question. How did you perform this week? Second question, based on your performance out of 10, 10 being really good, 1 being not so good, what worked for you this week? What worked for you this week? What worked for you this week? Okay. So far, there are 3 questions. Okay, so what is your performance for the week out of 10? So, put that in there. So today is January 29th, 2021. So what is your performance out of 10? And what worked for you this week? Okay, so who would like to share? Who would like to share? Okay, no problem. So for myself, I would like to share my performance this week was a 7 out of 10. What worked for me this week was my analysis was spot on. I got in with, I shorted the S&P 500, knowing that the dollar index was going to go up. I got in with a couple of trades, the dollar Swiss and the dollar CAD. Dollar CAD worked very well, and that's what worked for me this week. So Val, out of 10, thank you for sharing, Val. If you're going to rate yourself out of 10, what would be? So for me, it was a 7 out of 10 as an example for my performance this week. And if I'd like to introduce myself as well. I've been trading now for the past 25 years, and every week at the end of the week, every Friday, but for me is either Saturday, Sunday, depending. But every Friday at the end of each week, I will go through my trades, I will go through my performance, and I always have to rate my performance. Sometimes there are good weeks, sometimes there's not a good week. Sometimes I will rate myself a 9 out of 10, even if, say, the week wasn't like percentage-wise, wasn't as much the way how I wanted. However, performance-wise was a good performance because I followed every single rule in terms of my trading system. Okay, so that's one of my processes in terms of trading. Been doing this now, like I said, for 25 years. I started trading stocks actually in 1996, and from stocks went to options, from options went to futures, futures went to the forex markets. I find that the forex markets is less likely to be manipulated compared to, say, trading stocks. As everybody knows, this was the big deal, the headline for the week here in the US, depending on where you're at around the globe. GameStop as a stock rose pretty much from $25 all the way to $475 in a span basically of a week. But overnight, on the 26th of Jan, it went all the way to around $350, right? And then the next day, it went to $475 on the 28th. And then today, actually, I believe it's not open to the public in terms of buying or actually shorting, I believe. So there's some challenges or problems. I think some brokerages are currently being in trouble, but hedge funds were actually losing billions of dollars. So based from speculation from a bunch of Reddit retail investors using Reddit as an application to compete against hedge fund managers who are betting that they want to drop the price and claim bankruptcy basically from there. So that's from the article that I read. But nevertheless, this is something that why I don't trade stocks anymore, because of the manipulation of it compared to, say, trading the forex markets where it's less likely to be manipulated. You'll take the major banks in order to manipulate the price. If you remembered, I believe it was in 2014 when the dollar Swiss tanked massively. Maybe let's have a look here. 2014 here, December 2014, where there was a flash crash basically very quickly through there. So that being said, this was based on the four major banks going cahoots to manipulate basically the dollar against the Swiss franc, and basically Trump just dropped massively, like at more than 1,000 pips, I believe, in a span of seconds. So, but nevertheless, they got caught by the SEC, and they had to pay a big fine for it. But that big fine wasn't enough compared to the amount of profits as well that they have made in that span very, very quickly. So as an educator and mentor, I always find that trading or using Forex as a vehicle is a better tool for teaching rather than teaching stocks. Well, outside of the US, you can have a good leverage system to trade futures and stocks like your CFDs, for example. However, in the US, if you want to trade stocks, you need to have at least a minimum of $25,000 just to cover margin requirements if you want to trade more than 3 times a week. Not a day, 3 times a week. So if you want to be a day trader, you need to have at least a minimum of $25,000 to open an account, or else they won't let you, unless you're buying within the span of less than 3 times a week, then you're fine. However, if you want to do more than that, then you need to have that amount of capital. But not everybody will have $25,000 at the very beginning when you're learning how to trade, right? So, and this is also where a big problem with the retail industry simply is that around only 25% will be consistent. Out of that 25%, mind you, there's some holding positions and whatnot. 5% will make money, and the rest won't make any money. So it also took a lot of time for myself to be on the profitable side, and there's certain experimentations, but what really ticked my trading to consistency was going to the trading floor of the CBOE and CME by meeting basically professional traders and looking in terms of the mechanics behind what's going behind the scenes of a chart. So in other words, about price action, and also to fully understand the macro fundamental component that is attached to each and every currency pair. So my style of trading is simply utilizing the majors against the US dollar and the majors against the Japanese yen. So I don't normally trade cross pairs because for me, if I want to do that, say if I want to trade the euro against the Kiwi or the pound against the Aussie, then I need to know between two countries in terms of their economy. So I just stick to the major currency of the dollar because the dollar index plays for me a very big role in terms of the markets. In my opinion, this is the central hub of everything. This is my major leading indicator. And then if I can fully understand the relationship between the dollar index and the majors against the US dollar, then you have a better odds of winning compared to just utilizing a system using technical analysis. Okay, so that's basically my style. Risk management, I found risk management to be the most important part because without risk or a good money management and risk management, even if you have a good success rate of, say, let me give you an example where we are here. Just bear with me for 1 second. And okay. Oh, good job, Val. So yes, so I'm the same as you, right? Because of the spread. Exactly. I totally agree with you 100%. So this is my trades basically for the whole week, for the whole month of 2021. There's still, I have open trades here. So there's dollar Swiss, a dollar yen, and euro dollar, which I was basically still short. I'm long still the dollar against the Swiss franc. I closed the dollar CAD. So, but nevertheless, at the very beginning of the month, even though I have 15 wins and only 1 loss out of 16, but that 1 loss, which took my stop loss here at 100 pips. So overall still 477. So, but just imagine if to control in terms of risk management, controlling that risk So just imagine that 4 out of 477, and say I cut out my losses, say, to 50 pips rather than 100 pips, then that's an additional extra $50 or 50 pips on top of 477, right? So that's 527. So, but nevertheless, even though I'm still up pip-wise, money-wise, and percentage-wise, and this is where, like I said, very important, because if, say, the performance or the win-to-lose ratio changes, and it's no longer 96%, drops down, say, to, say, 60%. So that 60% with small, basically, wins, that one big loss will basically either break even or wipe out your pip-wise. So it's very important in terms of risk management to close the position as fast as you can if you know that the direction is no longer going within your direction. Because in trading anyway, there's only two ways. Once you're in the game, either it will go to your stop loss or it will go to your profit target. But of course, trading as well involves a lot of intuition. So intuitive process, like say that the Kiwi against the Japanese yen. Let me go through here against the Kiwi against the Japanese yen. I wanted to short, simply I was short here. I saw these two forceful candles, came back. Oh, okay, there's a potential it could reverse. There's a potentiality it could reverse. It didn't want to reverse. And so when it just simply dropped and it was going through a smaller time frame, it was consolidating. It was 73.40 somewhere, 40. This time here, it didn't want to. I took the small, basically small profit through there at 6 pips, and then simply it went up. It went up and then it dropped again. It went up and it came back down and went back up again. But I never get back in the Kiwi against Japanese yen because I was focused with the euro against the dollar with the FOMC. So, but nevertheless, my style of trading, I'm a trend follower. I use a lot of trends. I use multiple time frame analysis. So I use moving averages simply as a trending indicator. But in terms of my trading environment, I'm a supply and demand trader with utilizing trends. So that increases simply my probability, and everything I deal with is about probabilities. If it's less than 60% probability, then I don't put in a trade. It is seldom that I will. It will do as a test trade, but other than that, it's a very simple system of basically trading. All right, so that is simply my share of me as a in terms of who I am, and simply I collaborated with Tradewitufos, and I deal mainly more as neurolinguistic programming certified practitioner. NLP is simply just another chain of psychology. It's also a chain in relation with hypnotherapy, because in the early 2000s I had a really big drawdown and led to basically distress, almost got into a depression state because I lost quite a lot. And up to now I still have a coach. I had a coach during the time, and I really got into self-development. I really wanted to know about who I am, mainly because in trading I find that trading, even though we're trading against other people out there, at the end of the day, it's just a reflection of who we are. We're just trading with nobody else except us. So anything that has to do with our 6 inches between our ears is merely a result of our own, what we call our own personality. Hence, your personality is simply a reflection of your own current reality. So if you can change your personality, you want to have internal change, then it's important to look at your internal behavior, meaning in terms of internal behavior would be your belief systems and value systems. So do I take into consideration the trend on higher time frames or only the trend of the day? I am not a day trader, to be honest, Val. It's very seldom that I do day trade. I only trade if there is high impact news, say, for example, like yesterday or Wednesday with the FOMC statement. I want this high impact news to fuel price. So, because without news, it's very simple. You know, it doesn't matter what you trade, whether stocks or whether you trade futures or even currencies, then it won't move. So with news, everything in terms of because I see that when there's a large movement, it doesn't matter which time frame it's going to be, you have a lot of movement, a lot of acceleration. The science behind it is that, according to Newton's law number 2, force equals mass times acceleration. When there's a lot of when there's a lot of acceleration, a lot of movement, and you add mass, which is volume, you can actually calculate the actual force of each and every candle. So that force is being driven by an external factor. And what is that external factor? News. As a price action trader, I call myself, I'm not a retail trader, I call myself as a professional observer, an observer of price, because one thing is that I'm trading for. I don't know where you live, Val. I would recommend to go to a trading floor. So the New York Stock Exchange is really tough to get in, because of high security. If you don't know anybody basically on the floor, they won't let you in. But the CBOE or the CME, the Chicago Mercantile Exchange, is now closed, but the CBOE is still open. And let me see. I think I still have here. Let me share some stuff with you. Here we go. So from time to time, I take private clients to the trading floor so they can see the action behind the scenes. So this is basically a photo. The background here is the S&P pit, and this S&P 500 pit, so for the Chicago Board of Option Exchange. So notice if you're trading, or when institutions trade, they don't use charts. They only see people. They see pure price action, pure supply and demand, proper order flow, who's buying, who's selling. And then so when we were at the CME, so Peter is a futures trader that has been trading, I think, more than like 40 years. This is before this CME actually closed. CME is currently not closed because everything is algorithm based. But nevertheless, when they do trade, there's a big difference between floor trading and retail trading. So the question is, how can you translate everything that you see fit here on a chart or behind the scenes? So floor traders, they would need, or institutions, they need news. That's why if you see here, notice there are no charts. Everything is all about numbers. And then they're also waiting for instantaneous news. These guys have all the news basically in the world, right? They have instantaneous news. Like Goldman Sachs, for example, they have a picosecond in terms of instantaneous news compared to everybody. And that alone, based on algorithmic trading, that's why they have a 98% success rate. That's huge, right? That's really big. So, but nevertheless, that is what the pits, what it looks like. Basically, this is what it looks like. The pits here, the Chicago Mercantile Exchange, the CBOE, simply is very similar. However, once that octagon here, the people in the middle here are the market makers, and they're the ones who create basically the price. and then the people that surround either your large institution, your hedge fund managers, and so forth will start to basically buy or sell depending on what the news is. So what I'm trying to explain here is that every movement, every acceleration are simply based on news. So that's why, day trading, and not unless if you really have a good, not just a good system, but a good mindset, then you'll basically be very, very, very consistent. You can make money consistently. I find that noobs.com, Forex for Noobs, there is an article that they basically shared for Forex traders. When you're dealing below 1 hour, then the probability of success diminishes actually really, really quickly. So that's why the magic number is around 4 hours and daily time frame. 4 hours, once you're dealing with 4 hours daily, weekly, then you're no longer actually the success rate increases within these time frames. When you're dealing with weekly time frames and even monthly, news is no longer a factor where you need news in order for the price to be fueled. But because you're not looking at the charts frequently, not like say dealing with 1 hour or intraday trading, then not a problem. It becomes less riskier when you are holding your positions a little bit more longer. So if you are within that state, then you can handle and you have a bigger capital, then no problem. That's why I always believe in multiple trading accounts, in my opinion. You need by having a long-term, short-term, medium-term. Short-term is for quick in and out, like, for me it's like in days as a swing trader. And then depending, some of the trades are in position as a position trader, looking for bigger time frames, right? Like say the euro dollar, started going long actually when it was around 108. So, there's some great advantages by putting your trades a little bit longer. There's also good advantages when you're also trading a smaller time frame, because you're getting quick cash in and out, right? So, but nevertheless, though, these are the things that also qualifies within your own personality trait. That's what we call as in terms of personality trait. Why? Because, in my opinion, there are 3 aspects of conditioning. Let me circle. You have mental, and you have physical, and you have technical. So here you have mental, physical, technical, and they go all hand in hand. Your mental conditioning will be based on your belief systems, your value systems, your 6 inches between your ears. That ticks to make your decision-making process, because there's 2 parts of your brain, your subconscious and your conscious, your logical and illogical creative side. Before trading, in terms of a process, you need your logical side. Hence, you need the left side of the brain, the analytical side, the logical side. And then from there, from before trading, you need your logical side, logical and analytical side. And then during trading, you will need your right side of the brain, which is your intuitive process. Because anything, that's why in hindsight, everything is good. But once you're faced with this big picture right here, which is the unknown, This unknown creates emotional fear, emotions or negative emotions of fear, emotions of greed, but from that fear creates that fear of that creates the hesitation, the self-doubt. Then all of a sudden analysis paralysis kicks in. The person will sit on the sidelines. Once they see that either if price now is going against them, panic will also happen. Anxiety kicks in. They will micromanage the account. And if they have fear of losing, they're going to take the profits too quickly rather than leaving it and not having the patience because they cannot control it. So the bigger the time frame, when you're dealing here with a bigger time, so there's three components of technical analysis. You have price, you have time, and the third piece of the pie is distance. So why is distance important? Well, that's what connects in terms of price to where your direction is going to be in terms of your profitability. So a person who is what we call lowly conscientious, someone who is less responsible, less persistent, lack of confidence due to what we call neuroticism, and they're highly neurotic, then their time frame is the small time frame right here, and hence they utilize less than partly an hour. So they use 1 hour time frame, 15, 30, 15, all the way to perhaps 1 minute. Why? Because they can only control what they can control within that short-term time frame based on their emotions. So if they're even risk averse and they're not willing to take bigger risks, then that is their trading profile. They'll be day traders. On the other hand, if someone who is what we call highly conscientious, where they can be persistent, they are fully responsible, they have integrity, and mind you, this is simply part of the awareness of basically of the true self here. Now, if I'm dealing with a little bit more deeper level in terms of trading. So when someone is lowly neurotic, that they can control their own emotions, and they are risk tolerant to high risk takers, then their time frame is more longer term time frame. However, can a risk averse trader be a position trader or a swing trader? The answer is yes. And the key is simply through position sizing. Position sizing that is relevant or in relation to the risk that the person is willing to take. And the other hand as well is in terms of risk. You need pure honesty of oneself to accept the amount of risk. Because how often do people are really, really honest within oneself? For example, and I've done this numerous times where I've basically spoken to hundreds and or thousands of basically traders basically for the past 20 years of teaching. The question I always ask is like, where will you put your stop loss? And they will say, okay, I'll put it in this particular stop loss. And then the next day, if it's a loss, the negative emotion is still there. The if, the shoulds, the coulds, if only I put my stop loss way lower, then I'm okay. And then, so the other question I always ask is simply, well, when I asked you guys yesterday, you said you're willing to take that risk. So if you're really willing to take that risk, and if you accepted that risk, then there shouldn't be any form of a negative emotion of regret because you accepted it. So in other words, people in general are not very honest within oneself. They will say it without actually thinking. Why? Because what's controlling normally around the 98% is simply what we call our false self, the false self of the ego. The ego will take over rather than the true self, which is now either honesty, integrity, discipline, responsibility, and so forth. Because when you're trading and you are in the moment that is going in and out, up and down, and when you're dealing with price where it's instantaneous very, very quickly, and you say you're day trading or using 1 minute time frame, and the plan is simply, like, say, for example, to short, then all of a sudden you're buying rather than shorting, then all of a sudden you're going now against the plan, but without you even knowing on a conscious level. So by you no longer following the plan on a subconscious level, everything goes now to haywire. Why? Because you said to yourself that you're going to short, but yet you're going long because the plan is simply no longer on a bigger time frame. You got hooked in because you want to make money. So when certain elements kick in, either revenge trading or the desperation because you're pressured to make money, as a professional trader, it is a challenge to simply perform all the time because you're also under pressure to perform. You're under pressure to make money. You're under pressure to make a living, because if you're not making money, then how are you going to basically pay for your expenses and so forth? So, and this is also why I love teaching so much, because trading is a passion. Trading, like, I wish that the market doesn't close on weekends, to be honest. And it's like, for me, it's like martial arts. Yeah, I've been doing Brazilian Jiu-Jitsu for 12 years, Taekwondo for almost my life, like 35 years. I'm 48. And for me, it's a sport. It's like a sport without physical contact. At the end of the day, it's a mental game. But to be in that state, on the other hand, either competing as an athlete or in trading, the difference between sports and trading is that the reaction in sports is very fast. You don't even think. You're just reacting to the movement. You're reacting with the other person. In trading, even if you're using a 1 minute time frame, you have 60 seconds to change your decision-making process. When fear kicks in and the ego kicks in, it's over now controlling the true self itself. Anything can change. You will change, especially with the lack of awareness. This is why 1 minute is even very slow, because you have 60 seconds. 60 seconds is very slow compared to when someone's punching you and you have to react in a millisecond without even thinking. You're also using intuition as part of it based on self-mastery of a technique. But in trading, yes, it takes time to get to where you want to be. That's why I always recommend traders to always practice. Practice. And one thing I love about the Forex market is that you can put in one micro lot as a form of a trade. Because for me, I don't believe in demo trading. Because for me, it's like sport. I can teach you how to punch. I can teach you how to do a choke, an armbar. I can teach you how to do a takedown. But at the end of the day is how can you apply the technique in a live environment? You still have to, that's why we spar, this is what we call sparring, because you need to apply the theory in real time. That's why as a teacher too, it is more challenging to teach someone when it is on a live environment. So for me, we have a live trading class every morning from 9 to 10 o'clock Pacific Standard Time. Sometimes we do like the FOMC report or anything with high impact news. But to teach a theory in real time is more challenging than going to a weekend seminar and say, hey, look guys, I bought over here and then I sold over there. I've seen it. Like, had been to trading events, trading shows, and in most cases, no offense to certain educational programs out there, they will hire really good speakers and they will tell them exactly what to say. And they're not traders. They're just good talkers. They're good sellers. Because when you're in a seminar, it's easy for you to dictate in the past. But can you prove that your theory, your system really works in real time? Now that's a different ballgame. So, and then if you're demo trading, I don't really believe in that. And the reason being is because the subconscious is so smart, it automatically knows what's real and what's not real. Hence, that's why if it's not real, it will do anything and the level of confidence will actually increase because it knows that it's not real. But when you're dealing in the real environment and money is involved, and say, for argument's sake, in a real live trading environment, you're seeing numbers and you're seeing negative, and you're putting real money on the line, things changes. You'll be like, either you will micromanage the account, no longer following your plan, and hence I've seen it numerous times where, demo trading, you make money, they're making money in the first week, second week, 1 month, they go in a real live account, all of a sudden, boom, everything that they're doing goes the opposite way. Why? Is because the 6 inches between their ears. Why? Is because of the subconscious level where that drives the person. There's a really good show by Dr. Dispenza called Rewired. Rewired, it's on Gaia, or you can go through Amazon Prime. Highly recommend it. It's a really, really good show. And you see, now you know exactly what I'm talking about here, right, Val? So, these are definitely the things that you want to be a really good trader. Then that's why, in my opinion, these sessions are very important, because the only way for you to really know exactly what to do for the following week is going out through the next process here, is knowing what didn't work for you. Now, in most cases, people do not like to lose. That is the majority. When I say majority, almost 99.99% of human beings don't like to lose. Now, if that losing is connected to righteousness as an ego, hence, that's why people will hang on to the trade. They will hang on to the trade itself, even though if they know that, okay, it's time to get out, they will hang on to that trade. So that being said, it is important to really identify what these limiting beliefs are. These limiting beliefs that has instilled as part of our own behavior, our own personality, will be a reflection on the outer world as a form of result, either a positive result or a negative result. So in February or March, we're going to have some courses with Tradewitufos, mainly more about the mindset, which I've actually also been doing for years. So as a collaboration with Tradewitufos, this is simply my expertise in terms of the human psychology component, especially when it comes to trading. And if you're interested, please either email me at reynaldo@tradewitufos.com, and I'm going to give you more information in terms of when the next major program is going to be, or the workshop. So, but nevertheless, if you're tying losing in terms of your own righteousness, and you're not seeing as losing as a form of learning, then there is a big difference. Then you have a growth mindset. Losing as a form of ego is a fixed mindset. And this can be translated as well in every area of your life, not just in trading, but your relationship with your partners, your loved ones, friends, family, outer environment, your career. At the end of the day, you're also in a relationship with the markets. However, the markets doesn't know that you're in relationship with it. So, and when you're in a relationship and you're thinking that you're in a relationship, then another word, or what we call expectation, kicks in. Okay, so that's, I can go a little bit more into detail in the coming basic sessions, but nevertheless, when you're dealing with expectations here, then you're in trouble, because expectations leads to disappointment. Where you say that disappointment that you didn't make money, especially when you're under pressure. And when that didn't work, like in terms of finding out what didn't work, then you need to find the root cause. Where's the cause of what didn't work for you this week? And then from the causes, that causes simply could be, okay, well, I've always been very competitive. The competitive already for me happened when I was at a young age, maybe 5 or 6, with friends. I remembered my dad put me in boxing gloves, and all of a sudden with another kid, it's like, I can't believe they did that. And I didn't want to, all of a sudden, I think the competitiveness happened, and I hit the other kid basically cried, and then ever since then, that became almost for me like a habit. And then even at school, I'm very competitive. I didn't want to lose, so I'll do anything basically to win. And so in competition, the same thing. When the time that I wasn't selected because I lost, and then I basically said never again. So I trained 2 to 3 times a day, 6 days a week. The following year, then I became a national champion. And then through that aspect, from national championships, competed in the world-class level, competed in Europe, Asia, and North America, all the way to the 2000 Olympics, where everybody wants to get in. So that was a big highlight for me, that even though I didn't get selected to be part of the team, but to get the process to be there on an elite level was actually really cool. But nevertheless, by finding the causes, and then through there you need to find a solution. That solution will be part of your trading plan. So, for example, last week, part of the goal of the trading plan is to practice honesty, to practice courage. Things like this is the internal factor, not the external factor. And if once you would be able to do that, boom, I guarantee you, it's a big G word, your results will change magnificently. All right, guys, I apologize. We are running out of time. Actually, we're not ran out of time. I hope you enjoyed this session. So once a month, I'm here on FX Street. If, come on in, please. That would be awesome. And we'll be here. We can be more dynamic. And thanks, Val, for coming in. Thanks for sharing. I find it difficult to find the cause inside. No worries, Val. That can be done easily through proper coaching. So just get in contact with me here at Reynaldo@Tradewithufos.com, or you can basically, if you have any questions, you can go through Tradewithufos.com/Reynaldo. So www.Tradewithufos.com/Reynaldo. Sorry, all right, here we go. I will type it in here for you. Reynaldo@Tradewithufos.com. There it is. And you can also visit our website at Tradewithufos.com/Reynaldo. Awesome. Thank you so much, guys, for coming in. I wish you all the best for the next few weeks. Make sure to keep banking those trades. And after this, I'm also going to look in terms of where I'm at with my trades. And I really enjoyed it. Thank you so much. Have a great weekend, and I will see you guys later. Bye.